I think had more new cases yesterday than the entire Northeast, if I'm not incorrect. There's some concern out there, Jim.
It's not about grit. You're not tougher than we are. Okay, that's not why we got it. It's not a matter of, it's a matter of contagion. It's tag you're it with this disease.
What's going on, investors? Big news coming out of the cruise industry. So a lot of cruises have just been canceled just this week, and Royal Caribbean and Carnival Cruise are going to be hit by this huge news. Their stock is actually down in the reported earnings, and their stock was down about 3 to 4%. I think going forward, this particular industry is going to run into a lot of trouble because they're not getting government support like the airlines. So Royal Caribbean just canceled their November 30th cruises, and they're suspending all of their 2021 celebrity cruises. CCL has a luxury seaborne brand, and this company or this subsidiary is kind of canceling all of their 2021 cruises. And if these companies don't get going, they're actually going to start facing bankruptcy issues very soon. So CCL is currently burning around $770 million, and that was for Q3. Now going forward, they actually kind of improved that to $530 million. So something important to look at is their balance sheet in this case, because you just want to make sure how much cash they have going forward. So we'll take a quick look at CCL's balance sheet. So they currently have $8.1 billion, and at their current burn rate, they'll have around 16 months to sustain this. So they have around a year of liquidity left, and after that, that's when they're really going to start facing bankruptcy issues. And even before that, if the cash balance gets really low, they're going to start facing bankruptcy issues, and they might start consolidating other companies or start selling off assets. So they do have short-term borrowings of $3.3 billion, and they have long-term debt of $18 billion. So this company is very debt heavy, and most of that burn rate is going to come from their interest payments. So that's something really important to keep in mind. So if you believe that CCL and the whole pandemic will be over in the next year, then yes, I think CCL would be a good play to get into, but I think there are no really definitive answers, so you really need to keep that in mind. So nextly, we'll take a quick look at their income statement. Seeing this is really quite funny just because you see how much the company has actually deteriorated. Going forward, the income statement doesn't really matter because there's no way of knowing how much revenue it's going to bring in. Even looking at their past results is basically pointless just because the pandemic has just changed how the whole cruise industry, the airlines are going to be going forward. So looking at how much revenue they produced previously isn't going to have any effect on what they're going to do in the future. So just very interestingly, if you look at their 2019 revenue at this point, they had $4.4 billion worth of passenger ticket sales. And if you look at 2020, they sold $0 of passenger ticket sales. So that's actually very interesting and very sad to see. So if you just go down, they've honestly done a really good job on decreasing their operating costs and expenses. So basically everything has gone down. The only thing that they're really kind of paying for is some payroll. They do have fuel expenses, so they're probably moving the boats around. The ship and other impairment charges are non-cash, so don't look into that too much. Same as the depreciation, this isn't a cash expense, so that's something you could kind of just ignore. So overall, they lost $2.3 billion in operating the business, but they did have those non-cash expenses. Here's the interest expense I was talking about. They had $310 million. So the last quarter, they had $700 million of cash burn. So almost more than half of that was actually from just paying that interest. And overall, they had a net income accounting loss of $2.8 billion. So overall, guys, the income statement isn't too important at this point just because the business isn't really operating. If you're looking at this business and actually trying to jump in and buy, I think you should really focus on the balance sheet, and that's why we kind of started with the balance sheet first. So lastly, let's just see where the stock's trading and if it's a buy anytime soon. So it's at $15, and it's going to be really hard to pick a bottom with this stock, guys, just because it was at $7 already. So if you really think that this stock's going to be back in the next 3 to 5 years, it doesn't really matter if you pick it up for $15 or $25, because if you believe the industry is going to be back, then the stock's going to go up to 51 within the next 5 years. But at this point in time, this is really a speculative play. There's no way of knowing if we're ever going to get a vaccine anytime soon. So in that case, whatever money you put in here, just consider it lost. So guys, we'll leave this video here. Let me know if you enjoy this type of video, and please like, comment, and subscribe.